Have you ever wondered why you work harder every year but somehow feel poor? Why your parents could buy a house on a single salary but you can barely afford rent? What if I told you the answer isn't bad luck or poor choices? It's because you're trapped inside the world's largest pyramid scheme, and it's been running for over 50 years. If you want to understand how money really works and how history keeps repeating the same patterns, hit that subscribe button right now. This channel digs up the financial secrets they don't teach you in school. Let's dive in. Right now, somewhere in the world, someone is getting arrested for running a Ponzi scheme. Maybe they promised incredible returns on cryptocurrency. Maybe they claim to have a revolutionary investment strategy. The police will call them criminals. The news will call them con artists. And they are. But here's what nobody wants to talk about. The difference between their scheme and the global financial system isn't legality, it's scale. Strip away the fancy words like quantitative easing and fiscal policy, and you'll find the exact same structure. Old debts paid with new money. Early participants rewarded with wealth extracted from latecomers. A system that only survives if more people keep joining, keep borrowing, keep believing. The only real difference? Charles Ponzi went to prison. Central bankers get Nobel Prizes. Let me show you how deep this rabbit hole goes. Let's start simple. What makes something a pyramid scheme? Picture this. A guy approaches you with an opportunity. Invest $1,000 today, and in 3 months, you'll get back $1,500. Sounds great, right? You invest. 3 months later, like magic, $1,500 appears in your account. You're thrilled. You tell your friends. They invest too. Here's the trick. That $500 profit didn't come from any real business. It came from your friends' investments. The operator is just shuffling money between old and new investors, creating the illusion of profit. This works beautifully until it doesn't, because mathematics is unforgiving. If you need 2 new people to pay off 1 old investor, and those 2 each need 2 more, you quickly need 4, then 8, then 16, then 32. Within just 20 rounds, you'd need over 1 million people. Within 30 rounds, you'd need more than the entire population of Earth. No pyramid can grow forever. Eventually, you run out of new recruits. The scheme collapses. Early investors walk away rich. Everyone else loses everything. That's exactly what happened in 1920 when Charles Ponzi convinced thousands of people in Boston that he could double their money in 90 days using international postal reply coupons. For a while, he actually paid people back, which created a frenzy. Lines formed outside his office. Newspapers called him a genius. Then investigators started asking questions. Where was the actual profit coming from? When they looked at the numbers, they found nothing. No business, no investments, just money moving in circles. Within months, the scheme imploded. Investors lost millions. Ponzi went to prison. His name became synonymous with financial fraud. Now, remember that pattern, because you're about to see it everywhere. Let me ask you something. Where does money come from? Most people imagine a government printing press, churning out bills. And yes, physical cash exists, but that's not where most money comes from. Not even close. Here's the truth that sounds like a conspiracy theory, but isn't. The vast majority of money in the world is created by private banks when they issue loans. Not printed, not minted, created out of nothing. Here's how it works. You walk into a bank and ask for a $10,000 loan to buy a car. The bank checks your credit and approves you. Now, here's what you think happens. The bank takes $10,000 from its vault, money that other people deposited, and lends it to you. Wrong. What actually happens is far stranger. The bank simply types 10,000 into your account. That's it. No vault, no transfer. They created that money the moment they approved your loan. It didn't exist before, now it does. You spend that money on the car. The dealer deposits it in their bank. That bank now has $10,000 in new deposits, which means they can lend out 90% of that to someone else. That person spends it. It gets deposited again and again. From one loan, the banking system can create $50, $60, even $100,000 in total money supply. Economists call this the money multiplier effect.
I call it a pyramid scheme with legal protection. Because here's the catch. All that money is really debt. For every dollar in your account, someone, somewhere, owes that dollar, plus interest.
The entire money supply is a giant stack of IOUs. And if everyone tried to withdraw their deposits at the same time, the whole illusion would shatter. That's not theory. That's exactly what happened during the Great Depression. People panicked, they rushed to banks, and banks, which had lent out most of their deposits, couldn't pay everyone back. Thousands of banks collapsed, millions of people lost their life savings overnight. The system only works as long as people believe in it. The moment confidence cracks, the pyramid falls. Now let's zoom out and look at governments. Every country on Earth runs on debt. Not a little debt, catastrophic, unimaginable, never going to be repaid debt. The United States alone owes more than $33 trillion. That's not a number anyone can truly comprehend. If you spent $1 million every single day, it would take you over 90,000 years to spend $33 trillion. And that debt keeps growing, not because of emergencies, because the system requires it. Here's why. Governments promise their citizens services, healthcare, education, infrastructure, pensions. Those promises cost money. But instead of raising taxes enough to cover the cost, which would be political suicide, governments borrow. They issue bonds, which are just fancy IOUs, and sell them to investors, foreign countries, and central banks. Those bonds get paid back with interest. But where does that money come from? From issuing more bonds. New debt pays off old debt. It's the exact structure Ponzi used, just with a flag and an army behind it. But governments have one advantage Ponzi never had. They control the money printer. When debt gets too heavy, central banks step in. They buy government bonds by creating new money electronically. Trillions of dollars, euros, yen, conjured from nothing. This keeps interest rates low, keeps governments borrowing, keeps the machine running. They call it monetary policy. But the result is the same as any pyramid scheme. People at the top get richer. People at the bottom pay the price through inflation. Because when you flood the system with new money, but the amount of real goods and services stays the same, prices rise. Your rent goes up, groceries cost more, gas gets expensive. But your salary? That barely moves. Inflation is the silent tax that keeps the pyramid alive, and you're the one paying it. Let's talk about pensions and Social Security, because this might be the clearest pyramid of all. When Social Security was created in the United States in 1935, the logic seemed sound. Workers pay into the system while they're young. When they retire, they receive monthly checks. Simple, right? Except the money you pay in doesn't go into a vault with your name on it. It goes directly to current retirees. Your retirement will be paid for by future workers. That's not a savings account, that's a chain letter. It works fine when the base of the pyramid keeps growing. When birth rates are high and life expectancy is short, you have lots of young workers supporting fewer retirees. The math adds up. But look at what's happening now. Birth rates across the developed world are collapsing. In Japan, Italy, Germany, even the United States, fewer babies are being born. Meanwhile, people are living longer, much longer. So you have fewer workers supporting more retirees for longer periods. The pyramid is inverting. In Japan, the situation is so extreme that companies now sell more adult diapers than baby diapers. That's not just a quirky statistic. That's an economic death sentence for any system that relies on young people funding old people. The promises made to retirees can't be kept, not without massive tax increases or benefit cuts or printing money until inflation destroys savings. Every government knows this. None of them will admit it, because the moment they do, confidence collapses, and without confidence, the pyramid crumbles. If you think this is new, you haven't studied history. In 1720, England went mad for the South Sea Company. This corporation claimed it had exclusive rights to trade with South America. Investors poured money in, convinced they'd get rich. The stock price soared. People mortgaged their homes to buy shares. Even Isaac Newton invested. Then someone asked a simple question. How much actual trade is happening? The answer was almost none.
The company's value was based entirely on hype and new investors buying in. When the truth came out, the bubble burst. Fortunes vanished overnight. Newton himself lost the equivalent of millions. He later said, "I can calculate the motion of heavenly bodies, but not the madness of people." Fast forward to 1929. The American stock market had been climbing for years. Everyone believed it would keep rising forever. People bought stocks with borrowed money, assuming they'd sell higher tomorrow. Banks lent recklessly.
The pyramid of debt and speculation grew taller. Then, in October, cracks appeared. Prices dropped. Panic spread. Investors tried to sell, but there were no buyers. The market collapsed. Banks failed. The Great Depression followed, destroying millions of lives. Jump to 1989. In Japan, real estate and stock prices had reached absurd levels. Land in Tokyo was valued higher than all of California. People believed Japan would dominate the world economy forever. Then the bubble popped. Prices collapsed. Japan entered what they call the lost decades, where growth stalled for 30 years. An entire generation saw their wealth evaporate. And in 2008, the same pattern played out again, this time with housing. Banks lent money to anyone with a pulse. Mortgages were sliced up, repackaged, and sold as safe investments. Everyone assumed prices would keep rising. They didn't. The pyramid collapsed. Banks failed. The global economy nearly died. Each time, the pattern is identical. Unsustainable growth, fueled by debt, justified by the belief that new money will always flow in. And each time, reality eventually wins. But here's where it gets truly sinister. After 2008, what happened? Did governments let the system reset? Did they allow bad banks to fail, bad debts to be wiped out, and the economy to rebuild on solid ground? No. They bailed out the banks. They printed trillions. They slashed interest rates to zero. They did everything possible to reinflate the pyramid. The Federal Reserve alone created over $4 trillion in new money through quantitative easing. The European Central Bank did the same. So did Japan, China, everyone. And who benefited? Not you, not the person who lost their home, not the worker who lost their job. The bailouts went to banks, to corporations, to the people who created the crisis in the first place. Meanwhile, ordinary people suffered through austerity, unemployment, and wages that stagnated for over a decade. The profits were privatized, the losses were socialized. Then came 2020, the pandemic hit. Governments shut down economies. And the response? Print even more money, trillions more, stimulus checks, corporate loans, emergency programs. In 2 years, central banks printed more money than in the previous century combined. And now we're living with the consequences. Inflation at levels not seen in 40 years. Housing prices beyond reach. Cost of living crushing families. The pyramid didn't collapse. It was saved and rebuilt even bigger. But the foundation is weaker than ever. Today, global debt stands at over $300 trillion. Let me put that in perspective. The entire world's economy, every product made, every service sold, totals about $100 trillion per year. That means humanity owes 3 times its annual output. Imagine if you made $50,000 a year, but owed $150,000 on credit cards. You'd be drowning. That's where the world is. And the debt keeps growing. Governments borrow to pay interest on old debt. Corporations borrow to buy back their own stock. Households borrow just to maintain living standards. Nobody is paying down debt. Everyone is adding more. Why? Because the system requires it. Our entire economy is built on the assumption of endless growth. And growth today is fueled by borrowing from tomorrow. But tomorrow is running out. Interest payments alone are becoming unbearable. The United States now spends more on interest than on national defense. That money doesn't build roads or schools. It just services debt.
And as central banks raise interest rates to fight inflation, the cost of that debt explodes. Countries that borrowed heavily at low rates are now facing crushing payments. Some will default. Others will print money and destroy their currencies. Either way, ordinary people will pay the price. This isn't sustainable. Everyone knows it. But stopping means collapse. So the game continues. New money, new debt, new promises. Just like Ponzi, just like every pyramid scheme in history. So what do you do with this information? First, understand that the system is not designed to make you wealthy. It's designed to extract wealth from you. Your labor, your savings, your future. All of it feeds the pyramid. Inflation quietly steals your purchasing power. Debt traps you in a cycle of payments. And the promise of a comfortable retirement? That depends on a system that's already breaking. Second, stop waiting for someone to save you. Governments will protect the system, not you. When the next crisis hits, they'll bail out banks and corporations, just like before. You'll be told to tighten your belt. Third, focus on what you can control. Real assets. Skills that hold value regardless of currency. Networks of people you trust. Investments that don't vanish when confidence breaks. Don't put all your faith in a pension system that depends on infinite growth.
Don't assume your savings won't be eroded by inflation. Don't believe that housing prices will rise forever. The pyramid scheme can't run forever. And when it stops, those who prepared will survive. Those who didn't will be crushed. The global economy isn't legally a Ponzi scheme, but functionally, it operates on the same principles. Old debts paid with new money. Early participants rewarded at the expense of latecomers. A structure that only survives through constant expansion. Charles Ponzi's scheme collapsed in months because it ran out of new investors. The global financial pyramid has lasted decades because governments have tools he didn't. They can print money. They can enforce taxes. They can wage wars for resources. But even with all that power, the math doesn't change. No pyramid can grow forever in a finite world. History doesn't repeat, but it rhymes. And the rhyme here is deafening. Every empire that debased its currency collapsed. Every bubble built on borrowed money popped. Every promise of infinite growth ended in tears. We're not special. We're not different. And the longer we pretend the pyramid is stable, the harder the fall will be. The question isn't whether this system will break. The question is whether you'll see it coming. If this opened your eyes, subscribe to Monetary Archaeologist. I dig through history to show you the patterns they don't want you to see. Because the past doesn't just teach us what happened. It warns us what's coming next. And trust me, you want to see this one coming.